we were set to close in 30 days. However, we had to extend the closing because of the grant process.
Every 4 years, the market just slows down. I think a lot of these October stats, it's like almost the post-mortem of the election and what it does.
Say that I would prefer to, again, look at the property after we have it successfully under contract, because there's no point of, like, again, disturbing the tenant if we're like 5 or 10 grand off.
Well, welcome to the Beyond Wealth podcast. Jeremy Galloway, thanks for showing up and talking about the market this month.
Yeah, excited to get this in before the end of the year for sure.
Yeah, so we're actually switching studios, and we had a little bit of fiasco last time with the keys and the locks. It was a whole other deal, but we're here, we're doing it, so, and we survived.
Yeah, we did.
I appreciate you coming back. So every month we like to break down the, stats of everything. You do that as well. Oftentimes you're a very data-driven agent, and we've done some deals together. And so I was like, let's bring in another expert in the area and talk it through. So let's just dive right in. Okay.
All right, yeah.
All right. So in October of 2024, we had 2,276 listings, and that was in 2023. In 2024, we had 2,212. So we were actually negative on listings, which, the previous month as well was interesting because we were a positive on listings. So I thought that was, the market in general, leading up to the elections. Every time elections come around for the president, every 4 years, the market just slows down.
Yeah.
People just want to know what the next 4 years looks like. And so I think a lot of these October stats, it's like almost the post-mortem of the election and what it does to the market. Everybody's like, take a pause. When it gets that close, they're like, let's just hold up for a month. We're already close. And I think that's what a lot of that is, honestly. Even in the appreciation numbers we're going to talk about and all that, it was just not as much movement on the listing side. But then when you pop to solds would be contracts closed from the previous month or two of
that were already under contract.
So that is actually very positive right now. So solds 2023 was 1,252. In 2024, it was 1,454. So it was a 16.13% increase.
Yeah, but pretty significant uptick for sure on listings sold in the area. So I would say October 2024, when you look back on just the whole year compared to last year, that should be like probably an asterisk, especially on some of these metrics, just because, again, you've got this unknown of what everybody does for election or coming up to election. So it'd be interesting to see whenever November's numbers come out to see if there is a trend or if it just bounces back to what we're seeing in September.
Right. And also remember what happened when the anticipation of a Fed rate drop happened.
Yeah.
And there was actually a drop in interest rates.
Yeah.
So September's interest rate was 6.08.
Okay.
So a bunch of everybody saw that drop, and obviously that's like the bottom dollar. Not everybody was getting 6.08.
Right.
But that from the previous was a significant drop. And I think it pushed a lot of buyers into the market in September, and all those closings hit in October.
Yeah.
So, all right. So let's move it on. Medium sales price, 2023, 275,000. 2024, 282,972. So 3% increase.
Yeah.
A little under.
Yeah. Which you typically see in a balanced market. It's just a nice little appreciation.
Yeah, I think we are. I think we're still seeing some odd waves in the market. But I think for the most part, we are seeing some leveling. Yeah. I think election is still playing a role. And in addition, the rates, went back up.
Yeah.
Everybody's expectation that it would affect the 10-year note didn't play out exactly like they thought. And so our rates are back up to kind of where they were before that half point drop.
Yeah, we were. I think the other day I saw a lender share that it's above 7 at this point.
Yeah.
On the national level. Now, obviously, brokers and lenders can play around with those numbers a little bit, make them a little bit better. But on the national average, we're above a 7 now.
Have you seen a good bit of FHA stuff on some of your listings and everything come through? Or?
I have, yeah, yeah. I would say there's probably a lot more buyers now that are able to win with the FHA because there's less buyers out there. So it's not as competitive for a conventional loan or a cash offer to beat out a potential FHA loan. So I would say that you probably see a lot more FHA deals going on right now too.
You know, it's interesting too. I was working with a buyer, man, a month ago, and he was like $1,000 off, and his wife worked and he worked. Now they were for nonprofits, so they weren't necessarily rolling in both 6 figures, but they do well for themselves. They were $1,000 off of a yearly income to get approved for $15,000 of grant money.
Mm-hmm. Yeah.
And I was talking with the lender. He's like, yeah, they up the requirements for the income significantly. And we're seeing, and he was like, our bank's the only one who has access to that because of the type of bank they are. But
yeah.
And there's only limited funds, but I've gotten a lot of that too. There's a lot of grant money still floating around, helping with down payments and helping with closing costs and different things like that. So that's interesting to me too, because it's like, where is this grant money coming from? Is it influxes from previous, housing program stuff? It's really hard to say.
Yeah, and it could be that lenders have to be a little bit more resourceful, finding their clients to help buy, so that now they're getting more educated with these grants as well, and becoming a lot more understanding
the pockets.
Exactly. We had one offer on one of my listings this past month where we were set to close in 30 days. However, we had to extend the closing because of the grant process.
Yeah.
So sometimes the grant process will actually take longer than what actually the lending process will take, because you've got to do education that the buyer may have to do, as well as more documentation than what the lender has to have.
So I had one where they did an inspection, the first one ever. It was grant money.
Grant made the inspection too.
Yeah, so it was something through the local Birmingham, and so they had to go out, inspect the property, just like FHA does with their appraisals. A lot of people may not know, but just to structure loans, we'll step back a little bit.
Yeah.
Conventional, typically, they just walk the property. They say, does this property have the value? Every once in a while, it's still within their privy. Very, very, very few times.
Yeah.
They can say, hey, this property is in disrepair. We will not approve the loan unless X is done. That has happened to me maybe twice.
I don't think it's ever happened to me I mean, it just won't appraise then.
They'll approve the thing and it'll appraise. It's just like, hey,
it won't appraise that value though.
Yeah, exactly. It just won't appraise the value.
Yeah.
So the second step is FHA. They have a list of requirements that happens, I would say, I don't know, you probably could tell yours, but my FHAs come back with repairs probably about 30% of the time.
Yeah, probably so. Yeah.
A lot of them go through and
you're always holding your breath though. Like, please don't see that chip paint. Or that window doesn't open all the way.
But oftentimes when it is, it's like $1,000 punch list. It's not that big of a deal.
Yeah. Most of the time it's paint for me.
I always joke around.
Most time it's paint.
That the FHA appraisers all went to a convention and said that wood rot is the silent killer.
I know, right?
It's like, if there's any little bit of wood rot, it's got to be fixed. But on this grant was the only time I experienced it, and that may be happening more, where they wanted to inspect it, and they actually required a significant. It was still within the bounds of doing it, but I was surprised at what they nabbed.
Yeah.
And we had to go in and fix it to make the deal go through.
And again, just closed. I'm curious of does that take away from the grant money, because now you're having a third party inspection done? How that works out too. So I mean, again, I've not personally done a grant process like that, so I'm not sure But again, if someone's getting inspected, someone's got to get paid.
Yeah, you're right. They set it
Yeah.
up and all that, and that could be part of the funding. Is we're going to fund this department a certain amount, and then the actual funds,
Yeah.
So, but yeah, I thought that was interesting.
Yeah.
So-
One metric that I'd like to look at too is look at the percentages of properties being closed that month that is based on conventional FHA and cash.
Oh, yeah.
Because I just like to see how those trends happen over a year. So right now, Birmingham, we've got about 15% of all closings are happening through an FHA process.
Oh, wow.
Right now, it's about 30% for cash and about 50% of conventional. So conventional is still king. And I like to see those trends to see, again, if we have more cash buyers that come in certain months of the year, like if we see more cash buyers at the end of the year or at the beginning of the year, like how that all works too, just to see if I can kind of guesstimate what was happening with the market. But that's always a fun fact that I do.
I like that. I'm going to maybe start pulling that and steal that from you, because I'll be honest, like there's every once in a while I feel these surges of FHA offers.
Yeah.
And I'm like, where's this coming from? And it's just because you'll have some people who are even conventionally approved, but they go FHA because the rate's just so significantly better that they're willing to do the PMI. So that's a really interesting stat. I'd be curious as to year over year to see that trend throughout the year.
So far, I've not seen FHA transactions hit above 20%. Typically, they're in the teens.
So it's on par.
Yeah, it is on par. It's jumped 2% from last year. So it's 13% of all loans done last year was through FHA. This year it's 15%. So
Jeremy, already bringing value, man. That's why I had you on, man. I love it.
Yeah.
All right, let's talk about list to sales price. In 2023, it was 99.25. In 2024, is 98.92. Mm-hmm. So that just tells you that overall, people were open to reducing the price of their homes to get them sold.
Yeah.
I think that trends with where rates are at and with the election. Even though September had a ton of, obviously, contracts that closed in October, that would still be that same stat of things that are closing in October to get to that 16.13% of closings, people were willing to drop the price.
Yeah.
So, and then medium days on market went from 9 to 14, which again reinforces that list of sales price being a little bit lower. Things are just staying on market. And I noticed that through the fall. Like I was busy and I, did a good amount of business, but things were a little bit slower.
Yeah.
Things just weren't moving. People were wanting to list as fast. There was a couple clients who came to me. Right now, I'm seeing occupied properties not get a lot of activity.
Really? Okay.
And so there's a few that I was like, hey, I think we should try this in the spring. And, occupieds are different because you already have income coming in. Mm-hmm. As long as the tenant's good and things are rolling.
Okay, so you're not talking about owner occupied. You're talking about tenant occupied.
Tenant occupied,
okay,
yeah,
gotcha.
yeah.
Oh, yeah.
A lot of times I'll say, hey, with those people that come to me, my clients, I'll say, hey, let's pivot for a little bit because right now these aren't flying off the shelf.
Yeah.
And that's what I saw was a decent pullback in tenant-occupied properties.
Yeah,
sales.
I mean, you guys think about these buyer agents that can just jump in and look at probably 5 or 6 properties real quick if they're vacant. But if they're tenant occupied, you've got to worry about, okay, do I have to get 48-hour notice, or do we need to? And this is typically the way I would like to do it for listings: is let's get the offer first. So we don't disturb the tenant all the time, especially if it's a great rental rate versus the price, just so that we don't have to disturb the tenant too much. So that's typically my MO.
Yeah, I think I'm actually curious because we're working on a deal now.
Yeah,
trying to get in.
Yeah.
It's always fun to get in tenant, but I've found that that's pretty standard policy with other agents who work with investors to get the offer done first, get it under contract, and then inspect. Have you encountered any of yours where they're like, yeah, we'll set up, inspection, or you can put in a request and see the property before you put an offer in?
I think some agents would try to do that, that are listing agents. But again, at the end of the day, I'm trying to maximize my time on getting these offers out and getting them approved and stuff like that. So I've had the conversations with my clients like, hey, it's okay for us to go ahead and get this offer out. I have seen where offers will come in where it says, hey, we don't give the earnest money deposit until
Right.
the agent walks through the property after we have it under contract. So it's kind of like a tennis match between like how offers work out. But no, I would say that I would prefer to again look at the property after we have it successfully under contract, because there's no point of like again disturbing the tenant if we're like $5 or $10,000 off of what the seller wants, and then again we're just wasting everybody's time at that point. So
Yeah, we're not having a good conversation. So.
we're not at all. Yeah.
All right, so rolling into our other stats, Mountain Brook, Vestavia, and Homewood listings was 132 in 2023. 2024, 131. So really not much of a shift. I mean, percentage-wise, it's like less than it's a negative.
Yeah.
I would call that pretty much.
I would say that's yeah.
Apple and apple. Like,
Yeah.
pretty much the same, which is interesting. Solds, 2023, 86, went up to 92. So definitely a shift there. Medium sales price, which this I do not understand. And I will say that I've seen significant swings in the other way sometimes when you have like multi-million-dollar listings sell in these areas.
Yeah.
And the medium sales price will significantly jump.
Yeah.
And so that went from 604 to 507, which is very odd. Now, the average sales price actually went up. Typically, average sales price is less stable. So that's what's weird about this medium sales price is the medium sales price is the most stable, and that's typically what I go off of.
Yeah, and you only look at single-family homes. You don't look at condos. You don't look at townhouses, nothing like that.
Yeah.
Yeah, that is interesting.
So I don't know. It literally could have been, four or five multi-million-dollar sales that didn't happen, and then it drops that.
Right.
I don't know.
Yeah. That could definitely happen too, for sure.
List to sales price went up 1.28%.
Kind of what you expected for those area.
Yeah.
Still getting,
but not that aggressive. You know what I mean?
No,
not a crazy aggressive. Because if I look back in like September, if we go back into those stats, let's see. List to sales price. Last month it was in the negative, so it could be cooling off that market a little bit, and it's stabilizing.
But there's still listed prices over 100%.
Yeah.
So it's a very sought after area even at this point of time.
And what always makes me laugh, medium days on market 4 to 5.
Yeah.
I mean, stuff still flies off the shelf.
I know. Well, that those indicates between the list to sale and the median days on market, if it's less than 7, you're going to have a pretty good list to sale price for sure.
I thought it was funny though, because in the past, like when I've done it, sometimes it's been 1-to-1, and I pulled stats. I think I had a client kind of looking in that Homewood pocket, and I was like, it was like 45 houses were, on the MLS, and I think it was like 35 or almost 37 were under contract already. It's just the inventory gets snatched up really quickly in those markets. So moving on to the Hoover Trustful area, we had listed 2023 182, 2024 200. So that's actually really interesting because, obviously we were in a negative of listings in October, but in Hoover we're positive.
Yeah.
And let me double check. So Mountain Brook, Vestavia, we're in a negative. We're like pretty much same. But in Hoover, we're in a positive. Why do you think that is? Significant positive.
Yeah. We're almost 10% change of listings as well as solds. I mean, if you want to keep looking down that trend, I mean that's even a bigger jump. So we're comparing Hoover and Trustful to what again?
I'm year over year, but it's just from the overall market. We were negative on listings, but in Hoover, we're positive by 10%.
Yeah. So my data analyst brain would want to say, well, where we're losing, what sub market are we looking at that we're losing listings at?
Right.
We've got 5 picked out right here on the sheet. So yeah, we looking at other areas that are not being represented, like. Are we looking at the west side of Birmingham in that area? Are we looking at, like, I don't see Irondale here, which, I mean, again, Irondale doesn't pull a lot of numbers either. So,
and I try to pull, like, with these sub markets, I try to get ideas of price points. So if you move over to Adamsville, Centerpoint, Roebuck, Graysville, they're in a negative 21% listing.
okay, there you go.
So that's where some of that. But then you
Yeah,
go
but they're only
Pelham.
but they're only 36 properties. So I mean,
Yeah.
you're not really taking. You're kind of taking account of the differences, but again, substantially not taking in a case of Pelham and Helena that saw 21% increase in listings.
Yeah.
Vestavia that was pretty flat. And Hoover Trussville that jumped up 10%. And then you got Hueytown up here that jumped up 30%. So yeah,
Right.
I'd be interested in seeing those market changes too, because it might be interesting for my investors. Because if they are the lower price point areas, because we've got a lot of A and B class neighborhoods here,
Right.
See if the C and D class neighborhoods are seeing a pullback.
A little bit of pullback.
Yeah.
And we can dive in. So now I'm kind of comparing neighborhoods to neighborhoods. But
Yeah.
if you look at medium sales price on Hoover Trussville, we're at negative 7%.
Yeah.
And then if you look at Pelham, Helena, Alabaster area, medium sales price, we're up 2%.
Yeah.
So that's an interesting thing of there's a lot of listings in Hoover.
Mm-hmm.
And then you could probably see that with that, there's a lot of reductions of prices because of the surplus of maybe inventory, which is really kind of counterintuitive to what we've been hearing, that there's not enough supply.
Yeah.
So there is supply, it's just random pockets.
Yeah,
I guess.
Well, and there's another guy that I follow that does stats on national level, but does it for all MSA. And he said in the stats that he was pulling was showing that Birmingham was at pre-pandemic levels of listings. So the listings that we had in 2019 were at the same amount as we are now. So that's recovered, if you want to call it recovery.
Back to a normal market.
No, or at least to listings, that is.
Yeah.
Now, of course, our interest rates are different. Our price per square foot,
Yes.
or our sales price is a lot different from what we were in 2019. But at least for listings, we've returned to that number again.
Yeah.
So that was a pretty interesting stat that I saw.
Yeah, I mean, it's, like I said, the October kind of the post-mortem of our election time, overall, like looking at it, there's trends we can find, and we could dive in deep and try to surmise, but a lot of it is like very odd.
Yeah.
And there's some weird fluctuations, and I think you're right. Like earlier in the episode, you said, "Hey, there's just an asterisk on this. This month, and it really is. Like I saw a significant pullback in activity, conversations with clients. Like my listings didn't get nearly as many offers, and I think it was a lot of people just being like, "All right, we're a month out from this decision. Let's just hold on."
Yeah.
And that kind of reflected what the market did.
Yeah.
So,
yeah.
But yeah. So
yeah. Do you think we'll have a bounce back in November then? And if we do get a bounce back, is it going to be a bounce back at listings? Is it going to be a bounce back on properties under contract or sold? What do you think is going to be a bounce back in November?
Yeah, I think that the bounce back will happen in January to February.
Okay.
If I had to say. So we are just so close to the holidays, and typically we both know that some investors wind down, or people who need to make transitions are not necessarily as apt to make transitions during the season. So I think there is more starting. People are kind of like, okay, now that we kind of have an idea of who is the next 4 years, we're going to go ahead and start planning, figuring out what the spring looks like. So, I don't see with rate now. If rates were lower, I think we would, but we don't have those lower rates right now, and so those are kind of the levers that were holding back this. And one of them got figured out.
Yeah.
The other one is still high.
Yeah.
They did drop a quarter point, and I think that the thought was they were going to drop potentially another half point. So we didn't get as much of a drop there.
Yeah.
So I don't know. That's my take on it.
Yeah.
Looking at markets, looking at trends, you probably have your own thoughts on it. I'm curious as to what you think.
Yeah.
We'll be doing.
So I have some listings that were up for renewal. Like we were at our 3-month contract period, and I've asked them, said, hey, let's just take it off market for the next 45 days.
Yeah.
And let's bring it back on in January. because days on market kills you
Yes.
in the eyes of consumers and buyers, agents, stuff like that. So yeah, there's at least 3 listings, if not 2 other ones that I'm pulling off market this month, just in plans to put it back on market in January.
Yeah.
So
I think that's a good call.
Yeah.
So.
Yeah.
Well, man, I appreciate your time.
Yeah.
Diving into the stats, bringing
Absolutely.
your knowledge about FHA versus cash and all that. That was a fun tidbit.
Yeah.
And appreciate the time, man, and have a great week.
Yeah. Thank you.
All right.
All right.